Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is the largest farm products company a good investment? In this video we will be analyzing if Archer Daniels Midland stock is a buy. Could Archer Daniels Midland, stock ticker symbol ADM, be on the move back to all-time highs? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Archer Daniels Midland. Archer Daniels Midland was founded in 1902 by John W. Daniels. ADM started as a linseed crushing business in Minneapolis, Minnesota. Just a year later, George A. Archer joined the venture, and by 1905, they officially became the Archer Daniels Linseed Company, manufacturing the corn syrup, high fructose corn syrup, starches, flours, and plant-based protein used in most of our food products. Archer Daniels Midland has been able to carve out a very important niche in the food industry. Today, ADM is a global leader with headquarters in Chicago, Illinois. They operate over 270 plants and 420 crop procurement facilities worldwide, employing a massive workforce. Now let's look at the price action. Starting with the 1-year chart, we see that Archer Daniels Midland had a CAGR of about -22%. Zooming out to the 5-year chart, we see that Archer Daniels Midland had a CAGR of 8%. Archer Daniels Midland share price had been a steady climber but has pulled back recently. This may represent a buying opportunity. If we perform a backtest comparison of investing $10,000 in Archer Daniels Midland versus the S&P 500, we find some interesting results for Archer Daniels Midland. In that comparison with the S&P 500, $10,000 invested in Archer Daniels Midland would have grown to $17,685 or a 11% CAGR versus $22,796 or a 17% CAGR if invested in the S&P 500. This demonstrates underperformance for Archer Daniels Midland. An Archer Daniels Midland investment would have also been more volatile with a 28% standard deviation versus 18% for the S&P 500. Archer Daniels Midland outperformed the S&P 500 in terms of the best year performance, for which Archer Daniels Midland grew 40% versus S&P 500 31%, but underperformed on the worst year performance, where Archer Daniels Midland fell 20% versus the S&P 500 18% fall. In terms of max drawdown, Archer Daniels Midland fell 44%, more than the max drawdown of 24% for the S&P 500. Archer Daniels Midland did underperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Now let's hop over to market share and take a look at Archer Daniels Midland's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under food and see that Archer Daniels Midland is categorized under farm products. Expanding the farm products tab, we can see that Archer Daniels Midland has the largest market share in that sub-industry and actually appears to be growing. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Archer Daniels Midland, ADM, and see that the market share is 9.87% out of the publicly traded food, beverage, and restaurant stocks currently in the market. This means that nearly 10 cents for every dollar spent to eat and drink goes to Archer Daniels Midland. The 5-year market share CAGR for Archer Daniels Midland is 2.42%. This means that Archer Daniels Midland's market share has been steadily growing over time despite its market dominance. If we start in 2019, we see that the market share was 8.97%, 8.98% in 2020, 10.2% in 2021. 11.02% in 2022, but fell to 9.87% over the trailing 12 months. Archer Daniels Midland had been steadily growing market share until 2023. In this version of market share, we can also compare Archer Daniels Midland with other companies or entire industries. When we type in food, we can compare the market share data for Archer Daniels Midland among the entire food industry, which excludes beverage and restaurant industries. Archer Daniels Midland holds about a 21% share of food spend. It also has been growing over time but dropped in 2023. Let's take a look at the fundamentals to learn more. Gross margin is just 8%. This is actually a bit lower than other food companies. Revenue has compounded at around 10% over the past 5 years and has reached over $93.9 billion most recently. Low gross margin but decent revenue growth. Looking at cash flow, we see that over the last 5 years the operating cash flow has increased from negative to positive, while capex has worsened at a 16% CAGR. As a result, free cash flow has flipped positive from negative over that period. Free cash flow peaked in 2021 but has been declining since. This is not a good trend. Weighted average shares outstanding have fallen over the last 5 years, going from 565 million shares in 2019 to 542 million shares most recently. Archer Daniels Midland has been buying back a lot of shares. In fact, Archer Daniels Midland retires about 1% of their shares every year. This is a trend I like. Unfortunately, the declining free cash flow may slow the rate of buybacks. Now let's view return on invested capital. Return on invested capital has risen from 3.9% in 2019 to 6.9% in 2023. Archer Daniels Midland has become more efficient in driving profits from its investments, though this trend peaked in 2022. Hopefully the improving efficiency will restart. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 52 days in 2019 to 48 days most recently, Archer Daniels Midland has gotten a little more efficient over time. Unfortunately, 48 days is still high but this value is dropping. Now, let's look at Archer Daniels Midland's debt. The net debt to EBITDA has fallen over the past 5 years, going from 3.5 in 2019 to 1.7 most recently. While a negative net debt to EBITDA value is typically preferable, 1.7 is not bad. Last, let's explore dividends. Current dividend yield is a healthy 3% with a dividend payout ratio of 28%. Archer Daniels Midland is paying out dividends that its earnings can support. This indicates that the company's dividend practice should be sustainable. Dividends per share for this company have grown at a 6% dividend per share CAGR over the past 5 years and a 9% dividend per share CAGR over the past 10 years. The rate of dividend growth has slowed over time. The fundamentals of Archer Daniels Midland are decent. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Archer Daniels Midland. It is a food company with a gross margin of 8%. The 5-year revenue per share CAGR is 11%. Since the free cash flow has gone from negative to positive over the past 5 years, we will use the 3-year free cash flow per share CAGR, which is minus 24%. This is not good. While revenue is slowly growing, free cash flow is falling. A return on invested capital of 7% is low but growing. Next, the cash conversion cycle of 48 days is high but looks to be turning around. Concerning debt, a net debt to EBITDA of 1.7 means that it would take Archer Daniels Midland a little under 7/4 of earnings to pay back their debt. So from a fundamental standpoint, Archer Daniels Midland looks somewhat fair. Now let's switch our attention over to valuation. Archer Daniels Midland is undervalued relative to the S&P 500 with a ratio of 0.3. The price to earnings growth, or PEG ratio, is 0.5, indicating that Archer Daniels Midland is undervalued relative to their projected earnings growth. Archer Daniels Midland is such a large and integral food company, but it has faced a few challenges recently. We all remember the announcement of an accounting investigation regarding inaccurately reported financial figures. For investors, this issue seems to have been resolved. From a fundamental point of view, Archer Daniels Midland had been able to grow its market share, but that trend is now reversing. Adding to this the falling free cash flow over the past 3 years, and I do find some risks in the business. That being said, the valuation metrics indicate that the company may be undervalued, which may represent a buy opportunity for those that can stomach the risks. I would love to see either a better valuation or improved fundamentals. However, those two factors tend to have an inverse relationship. For me, Archer Daniels Midland is not going on the watch list, but I will watch this company carefully because I do think there are some opportunities. Many thanks for watching. What do you think about Archer Daniels Midland, and please be sure to let me know what other companies you want me to analyze. Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.